I don't know what I'm doing. I don't know whether to draw them up or down or.
So
Anyway,
when drawing the fib,
I figured after such a big drop, it was going to go up a bit.
right, and kind of trail it out. Yeah. When drawing the fib, you want to draw it in the direction of the move.
Of the big move or the little move?
So, like, if I want to draw a fib here, I've got two choices. So this swing high or this swing high, because these are two separate moves. So I'm going to draw it from the second move because this is the last move. And you draw it from where the move began to where it ended. And you can either put it here or you can put it here. I always go to the very bottom of it. So, which is going to be right there on that green candle. And then let me go ahead. I'm going to have to clean my charts up. They're dirty. There's too much going on. So this move hadn't made it back to its premium yet. We're still in the discount.
Well, I don't know why I got in, but I waited for it, whatever to happen. And now I can't think what it was. But,
what time was it?
That's a good question. Which one was it? I got in at 39.80, so 39.81.25 was the price.
39.81.
So it looks like it was the top of that previous candle. And I got, well, that was the average price because I got two. I get in one, and then if it goes my way, I get into another one. So
and it was on the 15-minute chart, right?
Well, I was actually on the 3, but
okay.
So let me go back to the 3.
Actually, you pulled your fib on the 15?
Oh, I can't remember. That was hours ago.
Oh, I got you. I like it. I've slept since then, Joey. My bad.
I don't know. Anyway, I got in and there were 2 contracts made at 81.25 and I got out. I got out of one. I seem to have deleted my partial. I got out of one at one point and I had the target set around the blue line. That the Monday high. Yeah. And I ended up I pulled it just short of it. And then I was watching it go up and I got out of the partial. I was watching it go up and I dragged my stop up. And then all of a sudden I'm going, gee, it's just sitting there doing nothing. Why is it sitting there doing nothing? That's unusual. And then I realized my internet was gone and I had no internet. And I was going, oh my God. And I pulled it up quickly on my phone and it got within 3 ticks of my target and then went down. And I was going, oh no, can't move my stop. And I was doing all this stuff with my computer. And I eventually got back in. and yeah, then it went up and hit my target. So I went, great. But I would have dragged it up higher to the blue line, but it stopped me out. I mean, it hit my target before I could move it. Gotcha. So I ended up making like, how much was it? I made $637.
Nice.
Yeah, so I'm very happy.
Nice. Can you post that link to your trading view or copy the image and put it in the chat?
I can, but I was going to, but then I was going, but there's no clear reason as to why I got in.
Yeah. Well, we can still break it down. So like, you can even put it in the chat in this in the Discord. You don't have to go to I mean not Discord, I'm sorry, in the just what we're doing here, Zoom, in the Zoom chat. What is this thing we're on?
I had drawn a, what do you call that thing? Trend line.
Yeah.
On as well. Let me just post it in here. I drawn this trend line on, so I was watching that as well.
Yeah, trend lines are good. I use them. I know that ICT doesn't or anything, but I use them because it tells me where liquidity is going. And if I can draw a trend line on it, then more than likely there's liquidity below it or above it, depending on the trend line. And that's a place where price may want to reach eventually.
Yeah, I was a little bit worried about it doing that while I was in the trade. So yeah, I just popped that in the chat.
Okay, awesome. So it looks like it's a more of a breakout above that.
Possibly. I don't seem to get in where I want to get in.
Gotcha.
I seem to wait for that extra little bit of confirmation before.
Yeah. And
because technically I should have I should have gone in at the bottom of that candle as it came back down.
Right.
But I didn't.
Or, this little small fair value gap would have been okay. But that's really, you got a little small fair value gap right there that it looks like it might have gotten close to or almost touched.
Anyway,
But no, you're not in a bad spot there. So it's in the middle of the Asia. It's 2130.
Yeah, I was out at the beginning.
And then it went on to target. Yeah. And it still hasn't even come back for this liquidity here.
Yeah, I took a partial at 39.85, 75. Because originally my first target, there was a fair value gap in that big in the big black candles to the side, which you can't see. And I had my first partial was at that point, and the final target was at the blue line or just below it. Because I always figure, what if it doesn't hit it? It almost gets it, and then you don't, and then you miss it.
Right.
But then I it was buggerizing around, so I think I went, I think I'll bring that first partial down.
Gotcha. Is this my mind went blank just then. I was gonna say something. Nope. I'll remember here in just a second. 2130. I'm actually pretty awake. Like, I'm pretty surprised.
That's good. Until she sent me a message and she was saying that she was pretty tired from being up late last night.
Yeah. We got home from bowling. Because Wednesday night's my bowling night. And we got home from bowling at about 9:30, quarter to 10. I was probably in bed before 10, but asleep by probably 10:15. So I'm running on about 4, which is good. I'll take that. But
now what I'm
go ahead.
Keep going. No, you go.
Oh, I was just about to get into this, but yeah, no, you go ahead.
Okay, what I was going to say was I am having trouble with the order blocks in that I seem to draw them all over the place. And I don't know if they're correct or not.
So looking at this chart right here, do you see any order blocks that you can that you would mark up right now? Actually, let's go to a 15-minute and get all the way back where we were. Are there any order blocks? We're not going to count this huge red candle. Okay. Are there any order blocks in this trail right here that you would consider? And let me see. Since it's just you and me, I wonder if I can let you draw. Where's Toshie? How are we doing? I don't really want to change it. I just want to give you host abilities.
Yeah, I know, because I can poke all I like, but you're not going to see it. What about if I request remote control?
Request it. There you go. Yeah.
So that's me. You can see me.
Yeah, there you are.
Okay. Now, I'm not quite sure how many, like, because technically, if it's a higher green candle, that means you think it's going to go bearish, right? So, like, well, that could be one, and 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 that could be one. Is that right? Or that one?
So, yes. However,
Can't
do
count the
they
carrot candle.
confirm a down move afterwards?
Nah, gotcha. No.
So
Oh, well, that one has come down, but it's only covered the candle.
Correct. So on a lower time frame, this one might be one. You might have some type of order block in that wick. You might have some type of order block in that wick on a lower time frame. However, on this one, because it doesn't create a new low, like we get a little swing low, but because it doesn't create like a new low, there's no reason for it to come back to it, correct? So as far as bearish order blocks, I don't really see any in this move.
Right.
Bullish order blocks, on the other hand, yes.
So would that be one there?
Yes.
Okay.
That
And
would
then
be
it came
one.
back to it.
Mm-hmm.
We went through it, but it didn't close below it.
Yeah, this first one right here, that would have been an area in which it probably hit the 50% of it almost.
Mm-hmm.
This moved back down into it. So, and then, yeah, are there any others?
So it would have to, would you count that one?
Absolutely.
Okay, because it went up afterwards.
Mm-hmm.
Okay. And then, so that would that be one there?
You could consider both of them a part of one order block.
Big
and
one,
that one too.
or the little one and those two together?
Mm-hmm. Because you remember, order blocks can be one or a series
or a
of.
So does that mean you think they will come back down to those ones?
Possibly. And what makes these order blocks is because you have, let me get my, oh, you're controlling it.
Oh,
Yeah, I can't get my annotations. Awesome.
I don't know how to, give up. There we go.
Awesome. There we go. Is the fact that we get a push away after they're created, right? So these two would be considered one as well because we get that push out. And that's the reason why this one is considered one. It's because we pushed away. So we could put a 50% on the body of that, stretch it out in time. You could put a 50% on the body of this, stretch it out in time. And 50% on the body of that.
That bottom one because it didn't come back down. But the second, that one there that you just drew on, you could have because it did come down.
Correct. Right. This could have been one of those entry areas where price moved away from it and then it worked its way back down. We can go to a lower time frame and check that out. So let me box that real quick. And then we'll get in and see if we can't find a trade here in just a second. So let's go 3-minute chart. So I don't have to readjust anything. This is a 15-minute order block. As you can see, it taps in right here, but price goes away and then it comes back and we tap again. Now, it doesn't get to the mean threshold of it because the blue line is not even the mean threshold of it. But we tap in and we, it looks like it's trying to figure out if it wants to get in there. And then we get these nice move away from it. And from that, we have displacement. And then we can look to enter right here and set our stops below there. And we would have had a little drawdown from wherever we entered in. But then eventually we got that move. So these are ways that you can enter trades as they, are on these uptrends.
Mm-hmm.
Because in these areas is where you're going to find the order blocks. These areas, you're going to find the breaker blocks. So
because with that squared, it went down out of it and then back up. Is that a breaker block? In that rectangle? No, further back when it first created. Or is that part of it actually being created?
Right there?
No, like in the actual rectangle itself.
Oh, right here.
Because it goes down to the bottom and out.
Right.
And then
So
it goes
this,
I think the purple highlighted area, is that what you mean, Jenny?
Yeah.
Yeah.
What's up, Josh? How we doing, man?
Good.
Didn't even see you come in. I was thinking, who's that voice?
I snuck in. My dinner's about to be ready, but I didn't even realize you were on.
Oh yeah, man. London session. I decided to do one today. Yes. I would not consider these a breaker block unless it broke down. So remember, this is a bullish breaker. I'm sorry, this is a bullish order block. So we want to take bull trades from it until price comes down and breaks through. Then it becomes a bearish breaker. If that doesn't confuse you.
Yeah.
So there would this I would consider to be a breaker block. Okay, we've got a push up, we've taken out liquidity. We've got this move down. Price comes into it because in the beginning, what is it? It's a bearish order block, right?
Mm-hmm.
Price respects it, moves away from it, but then we just broke through it. Now it becomes the breaker. So multiple ways that you can trade using order blocks, and that's the reason why it takes time. So I'm going to pull the 50% of this breaker. You see how that didn't close below it?
Yep.
This is confirmation. And here's your push away displacement. You also have a little displacement there. You can put your entry at any point in this move. And then there you go. You could even enter on the 50 because look at the displacement we have there. This is with this type of a push causing this to now be a breaker block. This would be where I'm entering that red line.
And so with where it is now, like current price, do we think it'll come back down or do we think we've missed it?
So we are trending pretty good to the upside right now. And we do have a huge move to the downside that we expect to kind of push back into. So I would not be opposed to re-entering. We could possibly take a trade right here. Let's see, this 97.02 is going to be the monthly because this is really my nearest. I haven't really charted it out, but this would be my nearest resistance. So let's go to 15-minute. We got some junk right here. Because so here's the thing too. When we're talking about a huge move based on news. So news moves do not respect any of this. They don't care. Nothing back here matters until we start getting into like extreme areas of potential like stops. we've taken out so much liquidity, but it doesn't care about the little order blocks or the fair value gaps or anything on the way down here. We don't know how far it's going to go. So we can't really rely on anything back here to tell us where this is going. But once it does stop, once we do start creating swing highs, now we can look through back to the left and find areas in which price may decide to get to, pull back from, get to, pull back from. So Asian session high. This right here is a breaker, an order block to begin with. Then when price breaks, it would become a breaker on the way down. Again, I can't go by any of this. Okay. So I'm going to draw out my lines from over here to try and make it match up. I really don't have to on this one because we got the Monday high range, right? And you can see how price has reacted to that Monday high, which is where basically this order block is going to be situated. So now that price has moved all the way up into here, now I'm dealing with this guy. This again, pull it out in time. You can see that we're messing with it. We're breaking above it. So it becomes, kind of invalidated. As we start moving up, we have to start looking here to try and figure out where we're going to go. As of right now, though, so I'm going to consider this structure some internal liquidity. This is going to be a place I want to see price comes to. Plus the 50 is right here. So I get back into a premium. So we're still taking buys until we get up into here. So we've got this. Because that's a huge wick on the 15-minute, I've also got that consequent encroachment right there. So these are areas in which my eyes are going to look for pullbacks. They can be targets if I'm in a trade, and I'm going to expect price to move back down. I'm just sitting here looking at this going, this would have been a great trade. All right, we've come back in. Here comes the push. Monthly is going to be the target. And we didn't take it. It's okay, though. I see a trend line forming.
You let me talk too much.
No, you're fine. It's all about learning, right? I mean, if we end up making money on these things, that's great. If not, no big deal. Like, as long as we're learning something. Like, the order blocks are like fair value gaps. They're everywhere. You have to make sure that you're choosing the ones that make the most sense. So, this order block, because this one took out liquidity, created its own swing high, is more important than this one. Even though they look exactly the same, this one comes up, makes a low, breaks above. Why are we not trying to trade off of this one? And it's because even though it does create its own swing high, look at the liquidity this one took out compared to that guy. So this one to me is going to be more important. Now, if price comes back down and breaks, then my eyes can shift. But until that happens, this is the one. And I'm not, again, I don't set limit orders on these things. So just because, when I say this is where I would enter a trade at, it's not like I've got an order set waiting for it to come down. When it comes down and starts to make its move away, that's probably when I'm hitting the button. Like, okay, we respected it. And I'll go ahead and hit the button. But what I really like to see is something that I'm hoping everybody starts like seeing. is we get an order block like this, price pushes through it, leaving displacement, fair value gap, and then starts making that. How many times have I pointed those out? That right there, it's building that liquidity to the bottom side, which puts that target right there. So that's what I'm wanting price to do. We're getting liquidity. I know I'm coming back into this fair value gap. My eyes are right there. All I'm doing is just being patient. We have definitely bumped our head right there a few times. So on Discord, I posted in the mentorship. I don't think anybody's seen it, but in the mentorship, I posted this last night, yesterday evening, and I was like, activity for homework, because I wanted to show y'all how precise these order blocks can be. And if you go to the 4-hour chart on the Dixie, the US dollar index, and scroll back to January 31st at 3 a.m. and look at that candle. It's going to be a bullish candle. You can put a 50% fib or box it up if you want to, but put the 50% fib on the body only of that candle and then extend it out in time, specifically today's session, meaning yesterday's session. And then what do you see? I don't think anybody's seen it yet. And I was like, crap. I was all excited about it when I saw it. I was like, this is amazing. I want people to check that out. So I still want y'all to check that out. I'm not going to show you. Yeah, you're fine. Let's go 4-hour. Still got too much going on up in here. So consequent encroachment, that's structure, and then we've got the fib now. I think we're okay. Oh man, yeah, that'd have been great. Look at that tack, that little tap right there. That would have been super nice. 13. Yeah. Yeah, that little touch right there. Yep. Slight miss. That sucks. We'll probably get, if it breaks through here, it'll break through with some meaning, and we'll get another push to the upside. That's what it looks like it's doing right now. I saw your trade on the Euro USD. It was a nice one, man. Yeah, we're going to come back and get some of this liquidity. Just look up. This is just kind of a too perfect of a line, right? You just got above that. Now we're pushing down. Fair value gap. Look. Oh, man. But we're right here. We should break through that. And this is where my eyes will go. Nice. Yeah, once we break through here, it looks like we're going to. I'm thinking here. And this could be somewhat of a low liquidity, low resistance liquidity run. Yeah, there you go. You have a fair value gap. Maybe a little small one right there. But I think that's about it. 12 hours long. Well done. So this is going to be your breaker. Jenny, this is one of those things. I mean, my day. Oh, I got you. Not the trade. Still good though. Sweet, man. So Jenny, this is going to be an order block here. This is the last down candle. And then we push up, and then we push up. Equal highs. Price runs right through it. And then we can set a box on it out in time. And it doesn't look like it came back to get it. It might have touched the bottom of it, but yeah, not quite. But remember when we first started learning the fair value gaps and everything, and everybody was always kind of like which fair value gap do you use? Well, you can use this fair value gap that's associated with this, and then if you put the 50% fib on it, you make it even more precise, right? So this is going to be the area in which I want to take that trade. You also can consider that as well if you want to be extremely conservative. You don't. I don't really know what the special sauce is for that. Yeah, that's the reason why I don't set limit orders on these things, because even this one right here, right? This guy, these two that are coming down, we've got this push. I mean, they slowed price, but price still went through them, right? There wasn't enough of a bounce to be taking longs from it. This one, though, could have taken a long from it, made a small amount. Exactly. But with your analysis, especially on the ES, if with your analysis of this order block here, you need to have, if we're only looking for 5 points on the ES, but with my analysis, if my target, so my red line is here, so let's just say I want to enter on the red line or near it at least. If my analysis gives me almost 7 points, I've got a 2-point now window that I can enter that trade on once it confirms and still get my 5. Sometimes you're going to look for 10. You're going to see a 10 points, and that's going to give you even more. And then your risk will always be just below the order block. So dropping back down into the 3, your risk setting this trade up can be whatever you're tolerating, right? So only 2.5 points here for 7, right? But I can even tighten that risk up even more to where I'm just below the order block. That's only 1.25. Yes, ma'am. Yes, ma'am. It is recording. So you can be super aggressive, or you can stretch this out. Like if I had a 4-point stop, well, now I'm covering all of this right in here. I'm able to take this kind of a heat even after I've gotten in. So let's say I don't get in until the top of that order block because I didn't hit the button fast enough or my spread got me there. Just adjust my stop to something comfortable because my analysis is I'm playing that order block. It has confirmed the order block here by not closing below it and pushing away. No, you're fine. I get it. You're fine. And again, if you have any questions, just send me a question. Today will be a little tougher to get in touch with me. We're walking through UT Martin College. It's about 3 hours down the road with my daughter. But I will still be around. But this would be the type of trade that you would want to be involved in. It's kind of high potential. We're on an uptrend. Decent order block becomes a breaker block, push back down. Confirms the 50%, so we're in it. And I mean, even right now, the fact that it's coming back and we've only received what we'd get out of it right now, 4 points. Yeah. Once we broke above this high, I'm either taking a partial or I'm at least moving my stop. Especially I've been in it for this long too. We've come up, bumped our head, done it again, just going to cut it somewhere up in there. Because these trades should not take that long either. These are almost like true scalps. They shouldn't take that long. If your trade is just meandering around, we're probably in the wrong spot for that trade. And I drew that trend line just a second ago. And now we're coming down into it. Yes, this right here. Mm-hmm. Yeah. Yeah, because I mean, technically, this is still a breaker block and it's still validated. We'll take this off the screen. That way I can move this on over. Until it breaks and closes below it, this is still where my eyes are. It was a good move in the Asian session. Of course, I wake up to do a London session. It's after a huge news event or whatever, and the move happens last night in the Asian session. Well, there you go. Look at that. Wow. That's just precision. Now, I know this isn't closed or anything like that, but look how it just come down here. And I mean, it's impeccable. You probably, this low was at 95.25. So basically that line. and then popped all the way back up to close at 98. So almost 3 points in that wick. If you had just an order set. Two, let's say you missed that move. When it comes back down, that fair value gap, perfectly touched. And then moved higher here. All right, since y'all are here, and I'm pretty excited, I want to show it to you. I don't think it's on here, so it'll be. Stop asking me that. Oh yeah, it is on here. So 4-hour chart. No, it's not. This is not right. It's supposed to have been here, and then this is supposed to have been here. There, and then yesterday would have just shown those two candles. So, like the homework was, go back to January 31st. January 31st at 3 a.m. There's the bullish candle. Box it up, throw the 50% fib on it. I think that's right. It looks like it's a little high, but. And then extend it out in time. That's where the news stopped yesterday. I mean, we penetrated through it clearly, but look where it closed. And then this opened, come down, kept pushing away from it. So, yeah, I'm doing your homework for you. I was just so excited about seeing that. So, I mean, it's a clear order block, right? Comes down, pops up. It now becomes a breaker. Using just the body of that candle, not the whole one, but just the body of that candle. Box it up, throw the fib on it. It's crazy how precise that is. That's where it closed. That's where the Dixie closed yesterday afternoon. This is the 11th hour, but it extends all the way to the 3 o'clock. And then this one opened up at 1500. It comes down to the bottom of that box and then pushes away. Yeah, absolutely crazy. When I saw that yesterday, I was like, oh my God, everybody needs to see that. I'm going to make them do it on their own, though. I didn't think it was exactly 50% there, because it wasn't exactly nestled on that, but it was within a pip. Like, little stuff like that, man. I'm like, that gets me excited. And that was that news candle. Drop down to an hourly, same thing. Drop down to 15-minute. You can see how the news came out. We pushed all the way down through it. We come back up, and we have just closed at the bottom of that candle, but have not closed below it. So this order block is still validated. We created this new guy. That's basically the 50%. I mean, that's the entire order block, that candle. So it's 50%. We're probably just below that because we'd just be taking the body. We'll probably get another bounce from it. So overall on the dollar, I don't think it's going to do a whole lot today, but because it's, yesterday was some big news, and today's news is the pound. Oh yeah, it'll be affected. Pound has the policy rate. It's supposed to be raising it a quarter. So that'll be good for the pound dollar. That'll be a good trade. So I know I know your account is a futures account, but pound dollar might be something to look at too. Because, I'm sorry. Because they're doing their bank rate monetary policy summary. That's what's coming out here in about an hour on the Swiss as well. So all of them are doing that. And the dollar could be affected, and probably not as much by the Swiss, but definitely by the pound. So over and over. Push through this, made new highs, come back down to it, touched it. This is a 15-minute chart, so that's a pretty good amount. And then because we've created this high and immediately smashed through it, I would probably have another one situated up here, waiting for price to see how it reacts there. But we have news coming out at 8 o'clock Eastern. So right there. Take it easy, Josh. Good trading, man. Thanks for being here, Bubba. Do you mean one here and one here? I don't think it makes it any stronger. Because I wouldn't necessarily put those together. Like, to me, every order block stands by itself. Like, even though maybe one lines up with another or whatever, to me, they just line up. Oh, you drew in a new block inside. You already drawn one. Oh, you're talking about the dollar. Yeah, let's go back to it. Well, we've clearly broke down because I had I had the replay on. Does that make it stronger? No, I just think it just gets in the way. Right. That's just how price has reacted twice in this area. So no, I don't think it's any stronger. But now let's take this off and see. Prices come down, right? Now we're trying to make these little bullish moves. This is where my eyes are going to look. And it's not because of the order block that I drew in overnight up here. It's the new one. This is now a breaker. So I would definitely be doing this. And that's where the new breaker is. Probably going to take this off. I know where it's at, so I can find it. But now that has become a breaker now, right? So I want to watch price get to it and see how it reacts. Let's say we do get up here and we do hit this and make the move. I mean, we got this one right here. This could be a target, which I know we don't trade the dollar index. We just use it as kind of a marker for what price is going to do in other instruments, but for charting purposes, I'm taking a short off of this line. I'll put my stop basically right there. So we're about 10 pips. This is going to be my target. Probably going to take a partial at the bottom of this swing low, which is in that fair value gap. And if we create another one, it's a 34-point move. So on ES 3 minute with that up candle on the last high be the block. We're back at it. This one. Yes. Because we created a new low with it. But because we have a huge wick here, I would get in the habit of, just for visual purposes, drawing out the consequent encroachment of big wicks. Because those can also be used in the same way that we use the mean threshold of order blocks. Now that's going to be kind of like what we talk a little bit about when we write. That's what we're going to talk a little bit more about, like consequent encroachment and mean threshold in the upcoming mentorship. That way, because I really want y'all. I mean, y'all seen my charts. I'll have these little 0.5s, in a lot of places. And most of the time, once you get to a point of being able to see them all the time, you don't have to put them in there. I know it's there. It's my, so I set a template up. These 4 things are different. So if I changed it to premium discount, it would show that. If I changed it to I call them imbalance. It's not imbalances, but it's just a regular fib. And then I can change it to mean threshold, consequent encroachment. It gives me just that. So when you go through and you set your fib, you can come up here and change it and put in whatever you want. 6279. Where's the 70? 70. And then you can create a template, save as. And then now every time you pull that up, you can change it to whichever one you want. Like every day at the end of your day, I would suggest going into the charts, picking out the time frame, the 15-minute or the 3-minute that you trade on, whichever one you trade on the most, and start picking out order blocks. Or and that's if you plan on using them. And again, you don't ever have to use order blocks. You don't ever have to use consequent encroachment or anything like that. There is, his name is the Conscious Day Trader, and he literally just uses the foundation of broken, sell side or buy side liquidity taken, displacement, fair value gap, and that's what he trades. It's literally his entire strategy. So if we drop into 5-minute chart, see what we can do. Stop grabbing things. I've got so much stuff on my charts. So he'll mark out, we've got a break of structure, add that break structure, fair value gap. And he'll trade this candle. And he'll put his stop, he'll trade the beginning of it, and his stop will go below the structure. and he'll point out and pick out his targets. That's the only thing he trades. So the foundation, which is what I call it, because I mean, all of this doesn't really matter unless you know where you're trying to get in at. And the foundation is buy side, sell side liquidity of a dealing range. Where is price getting drawn to? Once liquidity is taken, does it reject or does it bounce? You know what I mean? So at those points, that's when you make your decision. Are we still going long or are we going short? And then if it rejects, where's my fair value gap, my structure break? I'm going to get back into it, and that's where I'm going to take it. And my target's going to be sell side. And to keep me honest with where I'm taking my trades, which trade I'm taking, that's where you pull your fibs and you have a premium and discount of that range. If price started here and we're in the premium, then I'm only looking for shorts. If for some reason we're in the discount, then I'm only looking for longs. And you can make as soon as you chart, when you come to, well, that's where you have to start from, Toshier. You have your premium and discount, and you make your mind up before you even come to the chart that price, let's just look at, let's anchor it to this dealing range. So we're basically just looking at the whole Asian session. In this dealing range at the top here, I am only looking for shorts in this area. So if I come to the charts and price is already in the premium, I am looking to trade it down. I'm looking for a setup that breaks liquidity and retraces. And we really don't get that, on this chart right in here. On this move up, we get broken liquidity there, but it's right at discount, and it doesn't really give us any indication that it's going to roll. So I'm not trading. We have a little bit right here, but again, it doesn't really give us any kind of displacement back to the downside. So I'm not trading. And in fact, in this entire move down, we get no displacement. So I'm not trading. Price then breaks above my dealing range. This becomes invalid. I'm not trading. So, like when we first got on, we created this Fibonacci right here. This is the dealing range that we're looking at. This last leg down from the news event. And that's where price is just gradually coming up. So if I change this to my premium and discount, I am only taking buys from this area. So I'm looking for buys. And look how many buy trades have happened in this entire range, including that last one right here that we've been talking about this morning. And our target was the monthly, and we're about to hit it. So if I'm only taking buys, I am waiting for price to take liquidity with displacement and leave me fair value gaps so I can get in and go long. It also happened right here. I'll zoom in real quick. This is where Jenny ended up taking a trade right there. So we have, this is the exact trade setup that I had. We had a break of structure. I've already determined that I'm looking for longs. So I want a break of structure taking out liquidity. This is all of my liquidity right here. Structure gets broken right there with displacement because displacement left me a fair value gap. I'm trading the fair value gap. And then I'm going to target other, places. Like I could target this volume imbalance or whatever, or my overall target could be the Monday high. Or I could just look for 5 points, and that's my target. So if my target's 5 points and I'm taking a trade right there, my stop's going to be, about right there below the daily 4-point stop, looking for 5 points. There's where I hit it right there. And if not, I get it right there. So that's one trade. So now we have liquidity. It's just been taken. Let's say I don't get in this trade. Liquidity that's been taken. Liquidity that's been taken. We get a pullback. I can go to my lower time frames to see if we have any type of displacement to get in on a fair value gap. So we can go to a 3-minute chart. Structure break. Doesn't look like there's a fair value gap in there, so I'm not taking any trades. Structure break. Doesn't look like there's a fair value gap. Might be a little one, but. And then structure break. We do have displacement. They get a small little tick inside there. Let me make that a little bigger. There's my trade. We took liquidity. We displaced. There's my trade. We go long. That's all you have to know. You don't have to know any of the order blocks. And in fact, I would not start trading order blocks or anything until I have this down perfect. Until I can see this and I'm confident trading this is the only thing I need to be doing. Everything else is just, it's other things that you can learn to see in the market for targets, exits. Why did price stop there and turn against me or whatever? That's all the rest of it is. Yep. Yep. Because the fair value gap is that displacement. That's that move that happens so quickly that there's inefficiency in price between it. So price has to come back into it in order to close out trades and open up new ones and whatever. It has to balance it out before it can move on. And why did we stop before we got to the monthly? So just then, sorry, my brain's moving quick. We've got a fair value gap right here. I'm going to extend it out in time. Price touched it, rejected from it. Not to say that price is not going to come back into it because look, we're still looking for longs, right? Structure break. Fair value gap. Target. And this is going to be roughly 4 points, 3 points. We've moved a pretty good bit. I would be a little cautious in this area because as you can see, we're struggling to continue moving. So we're getting into a higher resistance area. So this is that trend line that I drew out earlier. Make it solid. So not to say that it doesn't bounce, we don't get up here, but and continue to be honest. I just feel like price is going to need to work its way back down before then moving up, because we moved so far. We're getting really close to premium because I think the 50% is right up here. So I'd be a little hesitant in this area. I feel like this could be a good spot to look for just above that. We have this guy. Move this back out of the way. And yet your charts eventually are going to have this all over it. So hopefully you're the one that's going to be able to read your charts, not me. Yeah, too many fair value gaps. Absolutely. Because they're everywhere. And that's like the order blocks. They're everywhere. All of they happen all the time, all over the place. And price will react to most of them. Price will react to most fair value gaps. Now, will they stop at the fair value gaps? Maybe not. They'll break through them and then they'll work into them and then move away from them, come back to it, never care about it. You know what I mean? Like they'll always usually find a way to come back to those fair value gaps and reprice. Same way with order blocks. That's the reason why it comes, yeah, and on different time frames as well. That's the reason why you have to choose in the beginning when I was telling you, like, you have to choose your time frame, your fair value gaps, your order, and now your order blocks and all this stuff. Like you have to choose those, based on your trading. And it takes time to do that. It's not like it's it's not going to be like the holy grail overnight type of thing or whatever, but it's one of those things like it's going to take you some time. You're still going to have failed fair value gaps. You're still going to have failed trades or even missed trades. Like if this if this explodes from this fair value gap, well, that's going to be a missed trade on my part because I want it to come back and take liquidity before it goes long again. But the more you get into the chart and the more you start charting these fair value gaps and eventually maybe even order blocks, and you start seeing how this particular instrument reacts on the chart those ways, you'll start seeing the fair value gaps that make more sense and the order blocks that make more sense. There we go. I'm going to take some of these lines and stuff off of here. So I'm not going to be opposed to this not stopping here. I want to see how price reacts to it. I honestly want to see it deeper. I'd like to see it come on down to this guy. And then play back through it. You took a little short. There you go. Couple of points. Are you still in it? out now, in at 98.25, out at 95.75. All right. See, so we're breaking through this. If it doesn't hold this, yeah, see, this is where I want to see it at. Two contracts. Let's see, 98.25. The break of that, almost the break of that trend line. 25 and then 95.75. Yeah, which is right before that order block. Basically 1-to-1, something like that. Yeah. 2.5. You're up on the day. Small little trade. There you go. Pull that up. Yep. You had that trend line. Started to roll. Rejecting that order block. Well done. And then targeting this order block. Lost a bit on it on CL earlier. Now it's up a little. There you go. And once you see, there you go. Look at that. Immediate rejection from that. Man, this is probably the way I need to draw out my mean thresholds. Almost to the tick. Yeah, it will be. Hang on. There it is. Bam. The body of that candle, it came right down to it and rejected from it. Because we moved this deep too, I'm going to take my time in taking along here. I'm just going to wait it out. Like, because this is a structured break with displacement. We have hit this order block. We can come back into this and then go lower. So it's a patience game, right? This is also the first time we've broken back down this deep after creating this type of a channel. All the rest of it have been, something like that broke out of. So this could just come back up and continue back down into this guy. Now, if we reclaim this order block though and kind of moving, I might go long. But that's a great trade there, Jenny. Right? We don't close above this order block. All those bodies on the 3 minutes stay right there intact and then roll. Good trade. And you didn't get too greedy with it because, you could have easily bounced here again. Yeah. Back to the 15-minute chart. We'll see what this looks like. Yeah, see? It kind of lines up in this area right here. And then we've moved away from it. Dean loves volume, and he doesn't really trade as much futures. So he's still in the process of, he basically trades the foundation of it. He doesn't trade the order blocks or anything like that. Like he has liquidity breaks, breaks of structure, liquidity grabs, and then plays the fair value gaps. He doesn't get as technical with it as I do. And where they bought that new company, the swimsuit company and everything, him and his wife have been so swamped with stuff like that. That's the reason why he's basically hasn't been all that much here, all that much. So in this past week, he traveled back to London for a little bit, and I think he just got back to Spain yesterday, last night. I don't know. But yeah, Dean, he trades the foundation of it. The 2022 mentorship model is basically how he trades. Premium discount, liquidity draws, structure breaks, fair value gaps. But I've told Dean that he should just continue to trade the Euro USD and the pound dollar. He is absolutely, he destroys those two currency pairs. And he trades based on volume and kind of hammers. Which I bet if we dug deep into it, it would be a little bit algorithmic in a way. But he has one setup that he looks for, trades the London Open with it, and he's very profitable. Like not just like he just and Dean just he's not a big huge fan of not volume profile, just volume in general. He looks for volume spikes and trap traders. So like there was probably a volume spike here. Dean would have took a small little short right here, and he would have done it with like I said, the pound dollar or something. So he looks for trap traders, and then he'll take the breakdown of it. 2023 mentorship, I think so, is slightly different. I'm not gonna say it's completely different because clearly he's going over everything that he went over with in the 2022. He's just being a little bit more precise and in depth with what he's teaching. And he's holding everybody's hand for the most part and walking them through days, like whole days, or not whole days, but whole trading zones. Whether he's live on YouTube or whether he's tweeting it out moment by moment. So like I 100% suggest if you don't have a Twitter, get a Twitter just to follow ICT, which we have it in Discord, so you don't even have to have that. Everything he tweets is in Discord. So just so y'all know, I'll pull it right here. Mr. Honglu, Dr. H, he created this and the Inner Circle Trader. So we get everything he sends out, his retweets and stuff. We get it. So using small time frame, ultra scalping model, and low risk model, he is on his way. I think this is his son. Yeah, right now his son. Pull this up. He's also teaching his son at the same time. So his son's in 150K Top Step account, and but yeah, very much recommend paying attention to the tweets. Right there underneath general chat. It is underneath general chat on mine. I'm assuming it's the same way for y'all. But that's the thing. Like, I know there's a lot of people out there that's like, they're a little bit. I guess they don't want to tell you like he's doing it because maybe they'll go watch him or something like that. But to me, like I'm just in it for everybody to be profitable. Like the things that I'm showing you are things that he's showing you. And I try and say it in a way in which I understood it. So that way maybe y'all can understand it the same way. And everybody needs to know about it. So because I have never seen the market react to this with this preciseness in the amount of years that I've been trading. $15-minute. We could extend this up to this one. Price has definitely slowed down. The thing about ICT and his teachings and stuff is he goes through like a whole bunch of rants and gets off topic pretty easy. So sometimes it's kind of hard to keep up with what he's talking about. Yeah, at 100%. And that's what a lot of people have done. Like T trades. If you don't know where he's at, go to YouTube, T trades. September last year, T trades had like 800 followers on his YouTube. He is currently over 40,000 followers right now. And it's because of the way he is able to break down ICT stuff into like 5 and 8 minute videos. It's pretty solid stuff. I watch him for clarity sometimes, especially like with the SMT stuff. Clarity. So like, and I'm not one of those guys. I'm going to admit that. Like, if you can find something in which teaches you, or you hear it a different way and it clicks, why not? You know, my way might not click perfectly. So, and I'm not egotistical to the point to where I'm like, no, you're supposed to be learning from me. Like, no, I'm not that way at all. Like, I understand how hard this can be and how frustrating it can be. And it's just one of those things like, there you go. And it's just and the difference in this and any other strategy, right? Moving averages, crossing of the 8 and the 21, Momo, things like that. The difference in this and that is that those things worked less than half the time. When they did work, they were great. You know, when Momo was worked once out of every 6 trades, like, it was a huge win. So you had to go through all those little bitty losses. But for some people, those little bitty losses add up to the whole account or whatever. And then you go small on the huge win. So the huge win isn't a huge win. With this, it is so repetitive. It happens so many times, and it is so repetitive that there's no way that if you're looking at it correctly and not backwards, there's no way you lose 5-10 times in a row unless you're just revenge trading and completely opposite of the market. But if you are trading premium and discount correctly, waiting for liquidity draws, displacement, fair value gap, entry, like, if you can get yourself to a point of understanding that part and disciplined enough to do it, then it's so repetitive. So, and precise. It's repetitive and precise. And you're on a 50K account, right, Denny? 2 of them. Awesome. That's awesome. Because here's the thing, you can get to a point to where you are comfortable enough taking that short when it breaks down. And if you were to take a short as it breaks down below that consequent encroachment of this wick, even on this candle, and you took that first move, that entire move is 29 points. But if you can get to the point to where you're confident enough in a news event to sell at a certain level where it did not, break or reclaim or whatever, you could take multiple shorts in this little spot right here, collecting 3 to 5 points each time. And this was fast moving. So, it'd be kind of tough to be like in, out, but you could easily get between 5 and 10 points on each one of those trades that works in this. And that's a 15-minute candle. So look how many times it goes up and down. Consequent encroachment is the same thing as mean threshold, except it's on a wick and not an order block. So it's just the 50% of the wick, and you utilize it the exact same way that you would mean threshold. Whoops. So price breaks down here. I've got the mean threshold. I'm sorry, the consequent encroachment of that wick. And I just wait for price to retrace into it. So if we go to a lower time frame, let's just go to a 5-minute. I know that this is the 15-minute consequent encroachment. So that's what I trade off of. Price works its way back up. Fails. You could have taken multiple shorts within these candles at the end of the day. Let's say this was an order block. Look at the biggest hesitation in that move happened at that order block. We touch there, we bounce up, and then we roll. But here's another thing. Is it the order block wick? This one? No, this is the no. This is just a large candle. Wait a minute. Back to it there. It's just the first, it's just a large candle is all it is, and a huge wick. Yeah. Yeah, you're not going to really put the consequent encroachment on something like this. But let's say you don't trade the wicks. You don't even know what consequent encroachment is. Perfectly okay. But you do know what order blocks are. 3-minute chart. Order block becomes a breaker, right? So it's an order block here because we have the last down close candle that took liquidity, and then price moved immediately from it, making new highs. Order block. It becomes a breaker block when price comes and breaks back down through it. Fair value gap situated inside this order block. Powerful combination. Price comes right into it. You could have waited for price to confirm that it's not going to close above the mean threshold of that order block. If you take a short here, set your stop here, or that might be too far away because that's like 7 points or whatever. You could go to a lower time frame and probably find that even better. But if you take a short here after this wick breaks down, confirms that, we break away from it, you could have taken a short, having your stop, up in here, up in there, however much risk you want to take, then you could have caught a piece of that. But look how precise that is. Even if we go to, that's the reason I say you have to choose your time frame. Gosh dang. It has to be your time frame because it looks different here, right? So you have to choose your time frame. But even if we say, okay, we're trading off the 5, there's my order block. Yeah, there. That's what I wanted. There. 5-minute chart. Last series of down candles, bodies only. There's my order block. Price comes down, makes it a breaker. Where we come back, right here. Doesn't break through the top of that order block, those two bodies. Rejects. Comes up, rejects it again. I can take the short anywhere inside that box. Catch a little bit of that. Over and over. Every single price. Every single one. I mean, every single time. And it's also, looks like it's the exact 50% almost of that fair value gap. So you don't even have to know order blocks. That's what I like about this system of trading, is that the foundation of it is all you really need to know. Liquidity taken. Liquidity taken. Let's say liquidity's taken, you're bullish, price comes back, you set an order here, you get stopped out. Structure break, fair value gap, price comes back up, you take a short. You just made up for that loss plus some in the same trade, in the same hour, using the exact same technique. And I know obviously it sounds easier said than done, but with time and practice, then this can easily be solved. And this right here is an ends trade that Fred took. Let me pull it up. I know we're getting late. Back trade it, right? Or is it because you want to be in the market because it's live? I want to be. I get it. I'm not a bit, I'm not a huge back tester myself. I forward test. So let's just say you've had a good week. You're up $1,000 in 2 weeks. Don't trade the rest of this week. Paper trade live. Oh, 1,000 in 2 days. There you go. Paper trade live. Realize that let's just say if today was Friday and there's going to be no more trading for the next 2 days, would you be happy with the profit that you made this week alone? Absolutely. So when you come to the charts, paper trade the rest of the week, and you're forward testing it because you're trading in a live situation, but just force yourself to do it with and it not be a live trading account, right? Just do it without it being a live trading account. Like that's what you need. That's what you should be doing if you struggle back trading, because that's what I do. I mean, don't do it because that's what I do. But so this is the exact trade that Fred took yesterday during the news. Liquidity was taken. He waited for liquidity to be taken to the downside. Nope. Back that up. Liquidity was taken. Price starts moving down quickly. There's his fair value gap. He enters there. He was bearish on this day on the news yesterday, and I was too. Bearish on the news yesterday because we were in the premium. Sorry. Because we were in the premium and we had just taken a huge amount of liquidity. It rejected. So he changed his mindset and went and not changed his mindset, but stuck to his plan and waited for the bearish opening. And this is what's called the ends trade, which is an ICT model where you only trade the news. And notice like the news release was this candle. And then price did this. And then he waited, and see how much slower the action is here? It's a lot of pips in that little bit of time, but the action slowed down. So he's not getting whipsawed in it. So he waits for the dust to settle and then takes a trade. This is a 1 minute chart. And he took this trade where it popped barely into that fair value gap. And on the same candle, he was out. So in 1 minute, he got 5 points out of that done for the day. I don't know if y'all remember Carrie. She's still around. She's not in the community as much now. That's all she did. That's all she ever traded. She traded the Inst model, and that was it. Yeah, that's all she trades. She trades like 2 to 3 times a week, and it's all based around the news. And everybody's always scared of the news. I don't want to trade news and blah blah blah. Certain news, I get it. You don't know what's going to happen. CPI can be kind of crazy sometimes, and you get these stupid huge wicks and things like that. But if you are, her name's Carrie. She's from North Carolina. She's been around for a pretty good while, but she hadn't been in the community, hadn't been posting in a pretty good while. Oh yeah, there we go. We'll go out to a higher time frame. So this has now become my breaker. This could be the breaker. Get rid of all of that. Yeah, like this. Back inside the Monday high. We just took or made an equal low right there. But look what's right there at it. Oh, man. Didn't see it. Over and over and over. And that's a breaker. I mean, I'm sorry, that's an order block because price comes up, we've moved down, made a new low, and then moved above it. This is an order block. Price come down here and touched it there, moved away from it, and look what price did. We did it again. So I'm going to wait a little bit. We're still in the discount area, so buys are still a good play. Is that an Australian song? There you go. Guy hooks, got it. Old Australian song. Some liquidity pool sitting right here. Relative equal highs. Like to see a little more confirmation here. Little structure break. Got a little fair value gap here. Reclaiming the Monday high. Let's see what we do with this guy right here. Because this is not really a good displacement back to the upside. This is just kind of a little grind. You can almost put a trend line on it. I want to see kind of a push. And then we can get back in it. And the reason I'm long here and not short is because we are in this range, right? We're in the discount area of this range. Yes. You should always scroll through multiple time frames, especially the higher time frames. So remember, we're still in the discount area. In fact, I'm not going to put that there. I'm going to put it over here. And this lets me know we are still down here where we should be taking buys for right now. Midnight candle is where we're situated at right now. I thought I had it marked. I may have it marked on a clearly I've got it marked on a different chart, but this is the opening of the midnight candle. But I look through the time frames that I trade a lot, right? So 15-minute chart, I want to see some order blocks on it or breaker blocks. And 5-minute chart, I like to see the order blocks and breaker blocks on them. And not necessarily the 1-minute chart, but sometimes the 1-minute chart, depending on how price action is going on, and obviously the 3-minute chart, which I know you're a fan of. So multiples of like 5 and 3, the odd numbers. All right, so look at that. We got a little displacement. We got this pushed down. That's cool. I would love to see this push. My target is about 92.50. That's going to be what, 3 points from where we're at now. Got this nice candle right here. Just going to wait. I want to see what it does because that is the Monday range high that it's struggling to stay ahead of or above. This one, not yet, because we want to see it make a new high. So right now it's just a down candle. It's just a red candle, a little pullback. If it never creates a new high, then no. This one, maybe on a higher time frame. Not on this one. Let's go to 3-minute. So again, not yet, because we haven't made a new high yet. So this right here is considered an order block, but it's bearish because we've come up, basically created equal highs, or you can say it's a new high, and then we rolled over and made new lows. So that's going to be an order block. This right here is going to be an order block because we've come down, pushed up, made, a no swing high, and then we rolled over. So 50% of that would be an order block. Yep. Yeah, it's not going to be, and again, that's what I keep going back to. It's one of those things where this is the time where you try and figure it out, and you just work through the charts. Like this one right here is a pretty good. I'm sorry, this red one right here is a pretty good order block because we've come back, we made a new swing high, and we've rolled, but we haven't actually created. I'm sorry, we made a new high, which made it an order block. And then when it broke down below it, it made it a breaker block. And look where price came back to, almost 50% of it. This would have been about the 50. But they need to make new highs in order for them to be, to me, that type of order block that I want to trade from. So instead of this red candle being a bullish order block, this green candle is becoming a bearish order block. But here's the thing. Like, let's say we switch our bias, and now that we're below the Monday high and the midnight candle, we want to take a short. If we get a breakdown, we can come back There's our fair value gap and structure break. I don't really need to know that it's an order block. I can enter here for the short. And that's, the first thing that we were being taught in the mentorship. We're in a downtrend on the 1 minute chart. We've made a new swing high, which when we broke down, now we have displacement breaking through structure. We can come back and take it short. There it is. I'm actually going to do this on the MES. I'm going to wait a second. Give it just a second. Should be logged in. Yeah, I'm logged in. That's going to be about the 50% of this being an order block. So just kind of waiting for a little bit of confirmation that this is going to actually continue bearish. And let me back out just a little bit. This is going to be target number 1. And the reason is that's a fair value gap. I'll go ahead and just take the sell there. I'm going to move this to the top of this order block on the 5 minute. So I've got a huge, very, very tight stop. Doesn't probably need to be that tight. I'm just going to make it that tight. And then I'm going to move my target right there. This is going to be about a 4, almost a 5-point trade. Let's go back to the 1 minute. And I've been talking about taking nothing but bull trades the whole time. But I'm basically just playing this downtrend. This would have probably been, obviously the best entry. But if I'm looking for a particular reason and confirmation, this fair value gap is it. This is why you stick to your plan. There we go. Took a loss on that. So we're getting that displacement that we kind of wanted to have earlier based off of this. That's probably taking trades because I wanted to take a trade. I'm going to wait and regroup for a second. Wow, it's already 4:45. Holy cow. Right, it made sense. And it's a part of the plan, right? Like we are in a downtrend, broken structure. I'm just playing the continuation. It still probably breaks down. I just probably had too tight of a stop. I only had like a 1.7 stop on it. So it was a super tight stop. I was on the micros and I took 2 contracts out. So a super small loss. And really, this just looks like it's generating some liquidity right there. I cannot believe we've already been on for about 2 hours. That's nuts. Time flies. Ooh, I bet the dollar Swiss is going crazy. That news came out about 15 minutes ago. I just want to see what the price action looks like. Not as much as I thought it would. I don't know. It was right here. It was an hour ago. But, I mean, you wouldn't have taken that trade before the trade happened, but this is the reason why I love this stuff so much. Break of structure, fair value gap, entry, target, or target this. And that's a pretty good move. Not only that, but if you go to, let's go to a 3-minute chart. Let's even go to a 4-minute chart. Maybe a 5. We can do a 3. Go to the top of this body, to the bottom of that body. Look at where it touches. I'm telling you, it's over and over and over. Things like this happen all the time. We got news event, we crack liquidity, we break higher, fair value gap, 50% threshold of mean threshold of this order block. All of that confluence. And then the daily price line could have been a target. Look how it perfectly hits the opening of the day. Across all markets, all the time. See, we haven't actually made a decision right here as to what it's going to do. So we're right at the midnight candle, this Monday high. I would love to see like a nice displacement, break of structure. There you go. Draw a box. And I wouldn't go from here. I'd go from this guy to this guy. Oh my God. There. So make the shading. There you go. All right. We get displacement above this right here, then I would consider this an order block and a reason to probably go long, which sets up for me to, take buys, which was my original plan, right? But even if I don't play this as an order block, if I get displacement higher from a candle, I've got a fair value gap. Let's say this guy is this candle. The next candle's not much of anything. And I've got a fair value gap. I can just play that fair value gap. We didn't get a displacement higher, but it kind of ruins everything. But it's just, the point is that you don't have to be learning like 100% confident in those order blocks. That's the reason why the mentorship starts with the foundation of liquidity, displacement, fair value gaps, and that being the entry model. So well, ladies, I know I wasn't profitable in this session, but I really enjoyed it. Hey, I'm glad you got a little bit of that move right there, Jenny. And I would definitely do it again. This was actually not too awful on me. Like I woke up really good at 2:30. Now 2:30 this afternoon might be a problem, but yeah, we will definitely do this again. And it being Thursday and you're up the way you're up, Jenny, I wouldn't even worry about trading tomorrow. If I looked at the charts, it would just be for just to see what they did. It would not be to be taking trades. Well done. But I'm gonna call it. This will be posted in the live room recordings, and I will probably take a long trade here in just a little bit, and if I do, I will put it in there. But anyways, y'all have a good day, and I will see y'all soon. Have a good night, actually. Not a good day. Good night to you both.